We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up Adbe. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bullish green push up to the top, doji candle. So the market's indecisive side by side with the second to last candle towards that bottom. So what's happening with price action? Price action is currently sitting at 352.48. So if price work is way up, it can head up to the price action wick, which would be near the numbers of 407.94. Markets make its way further up. From that level, it can head to the midpoint between the second to last candle in the market, which would be near the numbers of 472.70. And if price pushes up to the high, it's head up to the high overall of structure, which would be nearing the numbers of 564.12. So what's happening in the market? The market has spiked up to a high, came back for a retest. We're going to see if this market is respected for this level of work is way up. And now if we look at where the market came from, the last few candles in the market was consolidation, very tight, side by side. Then the market received a bit of a push, and we have a long wick up to the top, spike up to the high with that bullish green candle. So that market was the area that drew out that structure, that created that pattern, which pushed that market up to the high currently. So when that market did push up, we can identify that we have the first, second, third, fourth retest. Market pushed up and market came back down to retest a level here, which would be near the numbers of 341.28. And if it's respected, we'll see that market work its way up. If that market pushes down, then that means that market's coming from a pattern at the high. So what's at the high? We have two candles pushing up to the high. Third to last candle is a spike up to the very high. So that's identifying a double top. So the third to last candle, second to last candle identifies as a double top. So that's an M structure, M pattern in that area as we walk down the time frame. And that market pushed down with the second last candle. Price action being that bullish green doji is the retest, and if it pushes down further, it can follow up with a bearish red candle to push that market down. And if it heads down further below near the numbers of the second last candle in the price action body of the support of 335.57, it can head to the midpoint of the overall structure of where the price started and of the low and at the high. So the midpoint will be near the numbers nearing, say, within that area, 225.10. So market can still push down, create some momentum for that tag, for that overall midpoint touch to still work its way up. But currently right now, price action being a bullish green candle spike up to the high doji style, the market's consolidating. So far it's consolidating near the low of the second last candle. We are receiving that consolidation. So we put this as a zone. The market's in that area consolidating until we receive the break up to the high. The consolidation can continue, or the market's work its way down. Walking down to the 6-month time frame, so price action on a 6-month time frame still reading as a bullish green candle doji style spike up to the high. We don't just have one, we have two. Second to last candle is a bearish red candle spike up to the high doji style, both are doji. So we have price action, second to last candle dojis. So that basically creating that market for that consolidation within that area. So that market is bouncing up and down within the area with price in second. The third to last candle which is the candle that put the market back into that zone area, as we can see. So when that market did spike up to the high, lost momentum with the fourth to last candle, market came back down into the zone, and now we're into that consolidation, still waiting for the breakout to the top side or to the bottom side. Headed down to the 3-month time frame. Price action 3-month time frame reading as a bullish green doji doji spike up to the high, so it came back to retest. So when it's spiking up to the high or spiking down to the low, it's coming back to retest. So to have an idea where it's coming to retest, just look at the wick of the price action of that high, and you can see it's tagging the previous side. So if you look at the overall structure in that area, what pattern did we receive at that high that pushed that market down to current price? So at the high, we do have that pattern that's identifying for the first, second, third, fourth. So we have a double top. Price action came back to the midpoint for that retest, but it shortened the midpoint with the retest because with the price action because the third to last candle has tagged that midpoint for the retest first. So when that market did push down with the fourth to last candle, third to last candle retest, pushed down to an area, and his second last candle, price action came back to retest. We're going to see we're going to receive a push down. So if that market pushes down, there's a pattern reading in that area with the third last candle. Price action can be reading as a double top because that third last candle we do know is a spike up. So when that market came down for that fourth to last candle, third to last candle pushed up, that creates the first leg. Market came down for the second leg. The price action is the third leg. If it's denied for the push up within that area, market's coming down with a double top. And we can see that formation for that first, second, third. Market creates that double top and pushes down. But we do know we are in consolidation with the last few candles in the market, which will be the price, second, third, and maybe some of that fourth to last candle in the market, just because price action wick went into that fourth to last candle in the market. Headed down to the monthly time frame. So price action monthly time frame readings at the bullish green candle. So we got to remember 12-month, 6-month, 3-month time frame. It was reading as consolidation. Now we're on a monthly time frame. Now we see some type of movement, but may not be. Why? Because we do see momentum, like I should say more like a break and retest. So you think about it as levels. So if we go back up to read the market to that high, what does it read? Double top. So once again, we do see the double top, still formation of the double top from the previous time frames. So we do have that first, second, third, fourth. Okay, so that's the break of that double top. The market did multiple retests with the green candle. So overall retest. Market push once, overall retest. We're going to see if that market pushes down. And if so, you can see that double top that's forming in the area for that first, second, third, and market drops down. If not, market can create some momentum and push up for that W formation. We'll talk about that on the weekly time frame. But remember, as we walk down this time frame, we are still in consolidation. So we're just looking for that price action and going all the way to the left hand side within that area. This all that consolidation side we've seen from the monthly, 3-month, 6-month, and 12-month time frame. So as I was saying earlier, if the market pushes up from this area and we do receive that W formation, that market pushes up. Now on the earlier time frame, it probably looked like a W formation. Now it's look like a W in a retest. So if you look at price action, you look at what happened at the high, the low of that area. It's the area. And we have the first, second, third, fourth, so a double bottom, retest the previous side. So this market just retesting the double bottom, first, second, third, fourth, retesting the previous side of that W. If we get the engulfment as we currently see, just waiting for the closeout, and market can push it up for that double bottom in a retest. And then we'll just take it to the following level, and so on until we get to the high, unless we see some type of rejection. But we got to remember here with the price second, third, fourth, fifth, sixth, seventh, the last candle in the market, we did receive a spike up to the high. So that market could be identifying that it may be reversing and coming down. So this market price action may not make it to the very high or maybe above. So if it's two levels it can go, it can be rejected here and drop down, or it can push up to the following level, identify a pattern and still drop down. But that's why we just waiting to read the market to see what it does. So far, we are looking for that engulfment as we currently see, waiting for the closeout for that market to move up to the following level. Working our way to the daily time frame. So price action, daily time frame, market is very choppy as we enter the daily time frame. Bullish green candle, have a spike down to a low. We can see that formation of the W. So we just looking for the pattern in that area near price. And we do have that first, second, third, fourth. The break of the previous side. So that means we're looking for the market to push up in green, come back to retest to push up further. Please study and review Forex pattern cheat sheet, breakout and retest strategy. Okay, guys, this is Cam Jones, FX, ADBE, Stock.